Hey guys, welcome back to the channel McNallie Money, your home of all things stock, investment, and personal finance related. In today's video, we're going to be providing a follow-up on FlexShopper, trades under the ticker symbol FPAY or FPAY. This is one we covered initially a few weeks ago on the channel. A lot of interesting developments and great feedback from the subscribers. Before we get into it, take a second, hit the like button, you guys. Big help to myself and the channel, specifically in getting this content out to other people like you who may find value. If you're not already subscribed, McNallie Money, feel free to join and let me know in the comment section below if you're currently holding shares of FPAY, what you think about this company moving into next year, and your outlook on the sector as a whole. Now, with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we're going to be providing an update on FlexShopper Incorporated, trades under the ticker symbol FPAY on the NASDAQ exchange in the United States. Now, this is one we covered a few weeks ago on the channel. November 13th, the video went out the day before earnings. They've had a tremendous run in share price since that date, which we're going to talk about in today's video. We'll walk through earnings and some of the key investment highlights as to why you may want to take a closer look at FlexShopper and get them on your watch list. Now, as you can see, this is Friday, November 29th. First thing in the morning, FlexShopper is already up 14% on the day, 26 cents per share, or trading hands currently at $2.11 US. But where this gets even more exciting, if you look at a 5-day chart, you can see they're up in excess of 24%. And if we pull up a 1 month since our last video, again, which was put out on the 13th of November, they closed at $1.29 that day and have had an absolutely tremendous run, up nearly 30% in the last month alone. Now, despite this tremendous run, market cap on this one is still sub $50 million. And before we jump into the investor presentation, I quickly wanted to take a look at the customer-facing FlexShopper.com website. Obviously, Black Friday, a huge shopping event in the calendar, with FlexShopper advertising many of the core brands and products that are available on their website. And here you can see big ticket items such as the Sony PS5, the Xbox, or various different Apple or Mac products, which again are perfect fits for this lease-to-own model. Now, for those of you who missed our initial coverage on FlexShopper, I did want to do a quick review of the company's structure before we get into the investor presentation. They're headquartered in Florida, Boca Raton, and focused on offering LTO or lease-to-own alternative payment solutions to consumers and retailers. So FlexShopper offers cutting-edge technology, patent protected, which we're going to look at, that enables a traditional retailer to offer their services and or products to a demographic they weren't previously able to target, the subprime consumer. Our omni-channel payment solutions include lease-to-own or LTO, e-commerce marketplace, on-site e-commerce payment model, and a mobile application for in-store point of sale. So essentially what this company does is allow consumers to essentially lease the product until it's owned outright. So opening the door for potential consumers or customers that may not have access to that lump sum of capital. Now, before we get into their recent Q3 earnings, I did want to quickly talk about their asset-light model. This is something we've seen across many industries now, whether you're talking about Uber, Airbnb, or Uber Eats. A lot of the biggest companies and fastest growing tech companies in the world don't actually own a lot of assets and operate on this asset-light model. So FlexShopper, of course, has their B2C or business to consumer online marketplace channel. We just looked at that, FlexShopper.com. They've also got their B2B channels, which is protected under that patented payment method. And this is where FlexShopper is going to provide their retail merchant partners with greater consumer demand and higher sales conversions by providing that payment option or the ability to split up that payment on a retail partner's e-commerce site or brick and mortar location. So essentially offering their same services, but through the corporate or business website as opposed to their own FlexShopper platform. So what I really like about this dual channel approach is it allows the company to follow their customers and supports cross-sell or upsell opportunities between these various channels or repeat customer transactions. So here you can see their omni-channel point of access network with their retail, web, and mobile apps on the left, the largest online LTO or lease to marketplace in the world with the corporate website, and their e-commerce payment method platform, again enabling more access to more customers. Now, I mentioned a few minutes ago that their technology itself was patent protected. You can see here the FlexShopper umbrella encompasses 5 different patent numbers, which together create that defensible moat around the company's business. Patents cover computer implemented systems and methods for their LTO program or lease-to-own program, which when paired with the number of retailers and products that FlexShopper offers really is a powerful combo. And this is obviously leading to great financial results, as we're going to look at next up. You can see under the key statistics on the left, they've got a lease limit approved up to $400 million, over 500,000 customers within their base, and 4,000 retail partner locations already signed up. And here you can see both revenue and margin percentage for their Q2 results coming in just shy of $25 million. Now, this is where it gets really exciting for FlexShopper. They just came out with their Q3 results, like I say, on the 14th of November, so the day after that other video went out. And if you haven't looked into this earnings report yet, I highly recommend you do. It was a transformative quarter. They posted record quarterly revenue of $38.6 million. We just looked at their Q2 results, so a huge increase there. 5 cents worth of earnings per diluted share for the quarter, and EBITDA increased 45% year over year to a quarterly record of $12.2 million. Now, the CEO goes on to say 2024 is shaping up to be a transformative year for FlexShopper as the strategies we are pursuing to profitably grow our business take hold and more retail partners and consumers recognize the value of our unique payment solutions. We are successfully adding new retail partners and to date have expanded our store count to over 7,800 retail locations, so nearly double what we saw in that slide deck, a 250% increase since the start of the year. In addition, we now continue to grow our retail revenue and gross margin through the FlexShopper.com corporate marketplace. And that's the website we looked at in the intro. Now, Russ Heiser, who's the CEO, goes on to say, as we pursue multiple growth initiatives, we remain focused on managing risk, improving customer performance, and attracting higher credit quality customers. As a result, the provision for doubtful accounts as a percentage of gross lease billing was 22% for the third quarter, which is a 1,000 basis point improvement over the prior year period. Strong payment performance combined with the benefits of our strategic plan are driving significant improvements in profitability, and I am encouraged by the return to GAAP net income, as well as the 45% increase in adjusted EBITDA during the third quarter. So this was super interesting to me as well, as he talks about attracting these higher credit quality customers and a tremendous improvement in what they call those doubtful accounts or non-pay accounts in terms of percentage of lease bills. Now below you can see some of the quarter over quarter metrics and year to date or 9-month period metrics below, with total revenues up 20.3% to $104.3 million in the first 9 months of 2024. And an operating income of $17 million compared to $8.1 million in the same period in 2023. So obviously a very exciting earnings report. The market itself and investors are taking note, with share price surging over the last 30 days. Not to mention we're going into the busiest shopping period of the year with Black Friday, Thanksgiving, and obviously Christmas coming up, which should all further support those record numbers that we just talked about from FlexShopper in 2024. Now, I'd be curious to hear your thoughts in the comments section below, specifically if you're already holding shares or have used this service yourself. If you're still watching, hopefully you found some value, so make sure you hit the like button, you guys. Big help to myself and the channel, especially in getting this content out to other people like you who may find value. And if you're not currently subscribed, McNallie Money, feel free to join. We just crossed 46,000 subscribers, and we'd love to have you as part of the channel. That's all for now. Thanks for watching. We'll see you back here tomorrow.